and welcome back to my YouTube channel. My name is Noah, your favorite financial analyst, and in today's video I'm going to continue on with my Road to Riches series with episode 2 here, where we will be not only analyzing the performance of the previous $10,000 that we invested, but we will also be putting in an additional $1,600 into various ETFs. Thank you again for tuning in to episode 2 here, and with that being said, let's get right into the video. Okay, so here we are in the Charles Schwab investment page that I previously showed you guys when putting in, this $10,000 that we invested, or it was roughly $10,000. There's a lot of stuff going on the screen here, so we're not going to kind of go into everything, but the important details lie right at the top here. The account value, this is how much is in the account, right? And we know this is a brand new account that I put in $10,000 exactly and invested and so on. So right now you're seeing that it's 11,200. So you're probably thinking, okay, well, we made money, right? And that's not exactly the case here. The cash and cash investments, there's $1,600. And the reason it is $1,600 is because I had $49 and 71 cents left over previously from the $10,000, and I put in an additional $1,600 today. The market value, this is essentially what the investments that I made are worth right now. So if I would sell everything, this is how much I would make. The day change, this is how much I've made in a day, and you can see that it's plus 1,600 just because I put in that money from a different account. The cost basis is how much I have spent in total, right? So like I said, it was roughly $10,000, 9,950. So we were really close, but I couldn't really get a full share for $50 previously. And now the important part is the gain and loss, right? So this is essentially, it's in bright red here, and it basically indicates the total amount that I've either gained in value or lost in this case, on this account, right? So I put in roughly $10,000, and the value of the assets that I've purchased are they're down, right? So in total, they're down $300. So this basically means that I have lost $309.30 from the initial investment of $9,950.29. And it's not good news necessarily, right? But this is something that we really need to expect with investing and stuff like that. So it's not really out of the norm to see a loss like this. The way I like to think about it is the loss of $300 sure seems substantial, but the $10,000 that I put into this account was at the beginning of the month. So that's rounded to 30 days. I've lost $300, which could have been spent on going out or food or entertainment and so on. So it's really not too big of a loss if you look at it from that standpoint. Before we get into the actual purchasing of new ETFs and so on, I wanted to revisit the Excel sheet that I created on the first episode, which is essentially going to act as a tracker for the investments over time. So basically, I put in what I expect the returns are going to be, and then we compare to what those expectations are to see, if I've lost my mind or if I'm making poor investments and so on. So there's a lot going on here as well, so I don't want to get into the nitty-gritty of it, but the important details are in the columns right here. The October investment column is essentially just basically what I invested at the beginning of the month, right? So I spent $388 on VIS ETF, I spent $1,800 on QQQ, and so on. And then this next column right next to it on the right side is the projected returns that I was ideally hoping to see based off of the historical performance of those ETFs, right? So if I put in 388, I'm expecting that at the end of the month it's going to be 390, right? If I put in 2,357, I'm expecting that the returns are going to be 2,000, or the ending balance will be 2,382 with a decent amount $30 or so in returns there. Now, the next column is the important column because it's the actual result of what's happening. It's the real returns that we're seeing in the Charles Schwab interface right now. And like I said, it's not closed, right? There's still time for these numbers to change, but I think for the purposes of this video, it's not too relevant to wait until market close. So what actually happened for VIS, for example, right here, is that the current value of it is 374, right? So I bought in at 388. It's worth currently right now 374. So a loss. The next one, I bought in at 2,357. It's now worth 2,291, right? And so if we can go down the list, going back and forth, pardon me, um, I guess the only one I've made a little bit of money on is the VOOG. But other than that, I have lost money. Or actually, no. No, I've lost money. I've lost money on everything. If you look, I thought I made money on this for a second, but no, I bought in at 1992 and now it's worth 1913. So yeah, I've lost money across the board, and we know that that total sum is about $300. And like I said, this isn't necessarily the worst news. We know that there's going to be ups and downs. It just it does sting a little to see
Stings,
a
doesn't it?
little bit of money spent. But like I said, that money could have easily disappeared through other frivolous activities like going out and going out for food and so on. So, and like I said, this is over an entire month. So $300 in an entire month isn't too bad if you ask me. So now that we know a little bit about the performance of the investments that we made, in this case, not the best performance, we can get into the buying portion of the video here. So we're going to continue on with this strategy and continue investing in the ETFs that I identified in the previous video. And in this one, I've narrowed it down to 3 different ETFs that I wanted to not only augment initially, right? So there are ETFs that I haven't previously contributed into, but there's another ETF that I invested in last time that I want to keep investing in this time as well. So let's start with VDE, which is the Vanguard Energy ETF. I'm not going to get into everything about the ETF in itself, but I want to, for this this time around, the $1,600 in this investment account, I want to buy 5 shares of this ETF, right? So select action, we want to buy 5 shares. This is the amount that it's going to cost, almost $600. We do want to reinvest dividends always. I want to market price, so basically this is what I'm going to pay for it. And I think we are all good from here. So we're going to review order. And place order. And order received, right? So this is great. Let's place another order here. VIS is one that I want to invest in as well. This is the Vanguard Industrials ETF. I want to buy, and for this, I want to purchase 3 of these, so it's going to be 561. Reinvest dividends as always. Market day, market review order, and place order. Place another order. So we have, looks like we have just under $500 available. So the last one that we want to do is VPU, which I previously did not invest in, but this is a utilities ETF here. So I want to buy quantity. Basically, we're going to try to get it as close to 480 as possible, and it looks like we're so close. But we have to kind of cut it right here at 3. Reinvest dividends. Market, and review order, and place order, right? That's perfect. So Now that we've purchased those ETFs, we're left with $100. I'm going to just leave this in here for the next time that we invest, and there'll be, it'll add on to the sum that we have. But this is good, right? We put in some extra income into 3 different ETFs to not only diversify our portfolio, but we also want to augment the areas that we previously did invest in. 2 of the 3 ETFs that I invested in today, I had not previously. A lot of the ETFs on the first video were growth oriented and large scale ETFs that a lot of people consider. I wanted to get into electric energy ETFs and then the utility ETFs in this video here. So I've just updated the Excel sheet that we're going to be using to track all of the investments, and I put in, the newly acquired ETFs and so on. So now the target that we have, assuming everything goes as planned, are these values right here, right? So this is going to be at the end of November or right in the beginning of December. We're going to look back to see how our portfolio is doing, not only how it's doing, but if it's kind of living up to the standard that we hoped that it would based off of its each of their historical performances. So these are the numbers that we're going to shoot for, and we're going to see how close we can get to them. So there we go. Now you know that the $10,000 that I initially invested at the beginning of this month didn't necessarily live up to the expectations that I had for it, and basically lost me $300 in money, which isn't the worst thing, right? We know that the market is going to experience highs, it's going to experience lows, and $300 as a loss for me personally isn't really that big of a loss, because I really do hope that it's going to come up above that, and those losses will be recouped. So in the spirit of this, I will continue to invest into different ETFs and so on within this portfolio to hopefully show you, the viewer, the importance of investing a decent sum of money over time to help augment your account for your retirement. With that being said, thank you for tuning in to the second episode of the Road to Riches series here on my channel. If you have any questions for me personally, or if you'd like to take a look at the services that I can provide to you, I've left my email and a link to my company website in the description box below. Thank you again for your time, and happy financing.